Okay, we're gonna have people popping in, so thanks again for everybody for your time this evening. We got people from East Coast, West Coast, and in parts in between. So what we're going to be covering tonight applies to all y'all, no matter where you are, no matter what you're doing in your note business. This is going to be some great information for you to have, because 99% of you probably know about the hardest hit funds, but 99% of you probably have not been able to tap into it. We successfully got about 16 deals through the system in various states, and had I known what I know now, it probably would have been 3 or 4 times that. We really kind of gave up quite a bit of money, and so you guys are fortunate enough because of the changes in the industry and what the Fed just did, which we'll be talking about shortly. It's going to be just great times for at least another few years here on this. So tonight we're going to talk about hardest hit funds update. We're going to talk about new asset management solutions that are available out there, and a couple of other things we'll get to here in a second. So again, my name is Mark Gold. I'm CEO of Note.Guru. Many of you know me from American Home Recovery Fund. I was the managing director and fund manager of that fund, which was a timed fund, which we exited at the end of 2015. So I've run that fund from 2011 till we closed it down in December 2015. Sold off almost all of the assets. The rest of them are going through the system right now, and successfully got through that and made some great returns for our investors, ourselves, and helped quite a few homeowners stay in their homes and helped clean up neighborhoods. So it's been pretty cool. Also a very proud U.S. Navy veteran. Any veterans on the line, thanks for your service as well. So what we're going to cover tonight, we're going to cover today's opportunities in TARP, which is the Troubled Assets Recovery Program. If you didn't know what that acronym stood for, and HHF is Hardest Hit Funds. We're going to talk. We're going to go through a real case study on one of the deals that we got through the system very successfully. We're going to talk about our new asset management program for NPLs, and we're going to touch on financing for NPLs, which I know a bunch of you guys that are on the call have been hearing me talk about this for the last probably year and a half, 2 years. It's finally here. We just got the first approvals done, and we're rolling it out officially next week. But I'm going to touch on just a few of the points on that. So if you've been hunting like we were for the longest time, trying to tap into some outside financing, you guys will be pleasantly surprised on what we have in store for you on that. Okay, hardest hit funds. We're going to go through some basic stuff, and then we'll dig into the meat and potatoes. So in the first quarter of 2016, Department of the Treasury funded an additional $2 billion into the existing system. The existing hardest hit fund system was initially funded with $7.6 billion, and it was put in place to help homeowners in the 18 hardest hit states, plus the District of Columbia. I'm going to give you a chart after this on a website where you can see which 18 states. We don't need to touch on that, but as you can imagine, California, Arizona, Florida, Georgia, North Carolina, Tennessee, just a whole bunch of states that were able to tap into the system. The program end date was originally set to expire the end of 2017. With this additional $2 billion in funding, they took it out to the end of 2020. So the total amount of funding available right now is about $3.8 billion in the states that have received additional funds. And we'll talk a little bit about which states those are and where you should be targeting to take advantage of this for reasons that you guys will see here in a little bit. Hardest hit fund programs vary state to state, and they may include the following. So again, each state has different parameters, different guidelines, and different ways that they're helping their citizens in those states. So for the most part, mortgage payment assistance for unemployed or underemployed homeowners, principal reductions to help homeowners get into more affordable mortgages, help for homeowners who are transitioning out of their homes and into more affordable homes, as well as blight elimination and down payment assistance efforts. What we typically try to concentrate on when we're going after this are principal reductions and reinstatements. That's where you'll see that's where you'll get the most bang for your buck as the lender. And you'll understand shortly on how this plays into you as a note investor and how all this works. Hold on. There we go. So let's see. Hold on, let me just check these comments. Okay. Yeah, thanks, Johnny Holmes. We're going to talk about the target markets, and again, I only have 3 of them up here. What the real opportunity is, and you'll understand why in a moment. And hold on, there we go. So the reason that we're targeting these is the amount of capital that's available. Now, most of you out there, I've got California up here, which still has 48% of the award, which is $1.3 billion that's available through the Keep Your Home California program. They're on their 5th round of funding, which received an additional $383 million. We're starting to see more and more non-performing loans coming through the system. The price points are higher, but when you factor in that you could tap into an award of $125,000 through hardest hit, again, it makes you look at uptake a little bit differently than you may be looking at, $50,000 assets in Ohio, or $100,000 assets in Florida. So again, that's why California's up there, because almost at least a third of the remaining money is in California. So it's definitely worth noting that. 50% is in Florida. $710 million is available. Their 5th round funding, $77 million just got released. We do a lot in Florida. And then Georgia has $120 million. We do a lot in Georgia as well. They received an additional $30 million in 5th round funding. So those 3 states represent a total of $2.1 billion out of the 3.8 available. Now, all the states, all 18 plus DC, did receive awards, some smaller than others, obviously. As you would imagine, Rhode Island, which was one of the 18, probably received $50 on the last round. But again, these are the targets because of the amount of money that's there. What we saw in the last year, probably last year and a half, some of the states ran out of money because they awarded or wasted most of it, and New Jersey stopped taking applications. I want to say about a year ago. Ohio ran out of money. They awarded all their money, so they stopped taking applications just under a year ago. So those states have new funds now and are accepting applications again. So real important. Program focus, what we're looking for and what the qualifiers are. And actually, just let me take a quick look here, make sure we don't have any more. Yep, cool, okay. Analysis, we're going to be going after, we're going to be going after reinstatements, as I said. So reinstatements, we want to qualify. And again, there's a limited amount of money. There's a limited amount of bandwidth on our end and on our provider's end, which is the software platform that we'll talk about here shortly, which actually manages all 18 states, all hardest hit programs. So again, we want to go after the low-hanging fruit. We don't want to be spending time on a $20,000 principal balance mortgage in Louisiana, where we might have a chance of getting $2,000. That does none of us any good. So you'll understand more about the criteria as we get a little bit further into the presentation here. So we want to target $20,000 reinstatements. We want to target principal reductions above $25,000 and above 125 LTV. Because again, what we don't want to do is get 5,000 loans, put it into the system, and have 2 loans qualify. That really wastes a lot of bandwidth and time on everybody's business. So if we do our job in the beginning, weeding out the ones that really aren't going to be able to do anything, then it just makes it easier to get to the ones that can. And then analysis. So the way that we put this together, it's going to be a portfolio analysis and submission. We want to look at minimum 25, minimum deal size of 25 to analyze, and minimum of 10 deals to be submitted. Now, some of you on here might only have 1 loan, 2 loans, 3 loans. That's okay, because what we're doing is acting as an aggregator to take 50 of you guys that might only have one loan, and now all of a sudden there's a 50 loan pool. If it qualifies, if it meets the qualifications, we can aggregate and submit it like that. So even if you're a small player or just getting started, you're able to take advantage of this as well. You're very welcome. What disqualifies a note, and what's kind of what's your first run on a tape on what you're going to be getting rid of? If a borrower has already had a HAMP, oh wow, cool. It shows when a question is asked. Let's see. Okay. Oops, I just totally messed that up. Hold on. Not sure what I did, but I think I got it okay. If the borrower had a HAMP refinance or loan modification, it's not eligible. If they had a foreclosure, now this is going to blow out quite a bit of your loans, obviously. If they've had a foreclosure at all on that property, it disqualifies them for it. So now you say, well, what am I wasting my time on? A lot of the loans that you're going to be coming across, a lot of the loans that we've purchased have never had the foreclosure started. They might have had a notice of default sent out or a demand letter. That's not the foreclosure starting process. So there's quite a bit in there that does, but then again, there's also quite a bit that's going to get blown out by that. Bankruptcies are okay as long as it's discharged or dismissed. It just has to be, they have to be out of bankruptcy. They cannot be actively in bankruptcy to process the hardest hit fund application. So again, 1 day out, you can get started on the process. Non-owner occupied doesn't apply. Again, this program is in place to help people keep their primary residences. So unfortunately, it does not apply to non-owner. Second trust deeds. If you're a second trust deed owner, you cannot submit for hardest hit funds to help you with a second. If you own the first and there is a second, that's fine. But so just it's not for the second trust deed investors. And hold on, got a question here. Yeah, thank you, Dave. Got it. Okay, cool. So moving right along. Capital recovery success fee. So again, how does this work? At the moment, there's no fees involved to see if your portfolio or a multiple portfolio actually qualifies. The way that the company that we're working with on this gets compensated is on a success fee. So, and we did this on a number of them, and I'll go back to this in a second. So it's broken up into 3 different columns here. Under principal reduction, they're looking for a minimum target deal size of $25,000 in reduction, and at that they'll do a fee split of 50% to 35%. We'll explain that in a minute. Actually, let's explain it now. Volume deals reduce the success fee. So if you're a guy that has one loan, we aggregate it, you get an award on it, you're going to pay 50% of what the award is to the company that's actually doing this for us. And then you're going to keep half of it. If you're a guy that's got a couple hundred loans and it turns into a recurring event where you're submitting, we're going through the portfolio and we're starting to get more done, you could work that success fee down to 35%, where you're keeping 65% of any success fees on the principal reduction. And it's actually the same on the reinstatement, although the target deal size on that is $20,000, $20,000 minimum on that, but it kind of works out the same way. All the way to the right here under HHF analysis, right now, and when it says per 100, that's per 100 loans looked at. So we're going to try to aggregate 100 loans. Right now, there's no cost to do what you're going to see on the next screen. Eventually, coming out in the third quarter, there's going to be a $2,500 flat fee per 100 loans submitted, which is going to cover the analysis. It's going to cover the borrower outreach. It's going to cover all the things that need to happen to get these things successfully to the end. So just be aware that that is coming down the road. We don't know when, but just expect it at some point down the road here. Okay, what's the process? Again, it starts out with analysis, what we call brainstorming, right? We're going to review a portfolio of assets. We're going to peel out the ones that don't stand a chance. We're going to try to get it to the point to where we have outreach on, out of 100 loans, where we're going to try to do outreach on between 10 and 25 of the deals. And out of that, we have a good chance of working those deals through the system to be able to get to an ultimate win with the various states to be able to get an award on that. Activate proposals. So we make the outreach. We have the outreach people sit down with the borrowers, fill out the paperwork, get it all submitted, and then get a proposal to them. Here's what's going to happen. You're behind 2 years on your payments. Hardest Hit's going to pay the reinstatement of 2 years, maybe $10,000 in principal reduction, and then go ahead and just rinse and repeat, move on to the next portfolio. Repeat, work through the portfolio and the portal, and just keep, again, as you acquire, putting new deals through there. So the important part about this, looking at the technology, the power, and the experience that's involved in this, the company which built the software platform is called Counselor Direct, and what they did is 6 years ago, they put this in place, and they actually went out to each of the 18 states, and they became the approved vendor for each of the states to be the portal for the consumers to apply for the hardest hit funds, and then also for us to be able to work with them to be able to get the lenders, servicers, and everybody else integrated in there to be able to move these into a successful disposition. 20 years of distressed asset experience, 6 years of hardest hit fund experience. So again, it's a combination of using technology, using experience, using the experience of the last 6 years of working through this, and now taking advantage of this new batch of funding and being able to work everybody and hopefully get more investors and lenders to be able to take advantage of this. So real quick, some of you that aren't familiar with hardest hit, the most important thing to understand is you as a note investor, you are now the lender, right? So we're sitting here. We have a borrower. We now have a borrower that we're going to reach out to. We're going to hopefully make contact with them, and we're going to be able to get them to apply through the portal, through the outreach program. And now you as the lender get any of those awards from the various states to where that's coming into your servicer, which has to be an approved servicer with whichever hardest hit state that we're working with, and we'll talk about that at a later time. And then literally the award comes into your account, whether it's reinstatement, principal reduction, and is applied accordingly to that particular loan. Let me just check for questions here real quick. It looks like we got some. Yep, never mind. All right, so moving right along. Okay, so we're anticipating a pretty big year in 2016. This specific side of the portal, we expect to distribute through our part of the portal over $10 million in state housing assistance directly from HHF. The state programs through this initiative alone, and we're booking capacity now. Again, there's going to be limited capacity on how many we're able to take in, how many deals. So again, we're going to be working with a limited amount of people. So with that said, any of the bigger guys that have large portfolios, we have a direct in. We'll connect you guys if you're on here directly without having to come through our smaller portal. The smaller portal, which is AssetWorks, which we'll talk about here in a few moments, that's for the smaller guys. Anybody that's got one loan to 20, 30, 40 loans, we'll aggregate them together and we'll submit under one umbrella to be able to get those in there, and we'll have to help manage which deals, doing initial scrubs and which deals go in there. Again, there's a limited bandwidth on being able to do this, so we need to put the processes in place to make sure that we're working very intelligently on this, if that makes sense. So again, never before, just reading through here, never before has there been a B2B housing assistance software solution or program that's available for just delinquent note holders and servicers who seek to proactively capture remaining capital opportunities and save families from foreclosure through the HHF state housing program. So we're real excited. Again, going back to when we started, I found out about hardest hit funds, and we spent the first 2 years, kind of knocking our head through the system. Unsuccessfully, actually not completely unsuccessfully. We got one deal through the system on our own, and then said, you know what, it looks like we're missing out on quite a bit. So we had hooked up with a company back then, not these guys, but a smaller company that had some connections in with HHF. And then we started doing something very similar to this, where we just had them, look through our portfolio for the low-hanging fruit, and lo and behold, we got probably another dozen and a half deals through the system by having the experts that know what they're looking for do that. Had we not done that, we probably would have ended up with one deal done out of 1,600, and big deal, right? And when you see here on the next slide, I think on the next slide, what this means in relation to your ROIs, you'll really get it. So again, this is really cool to be able to take advantage of this and be able to and hopefully be able to amp up your returns. This is a screenshot of the of www.treasury.gov. Any information, it's all current information on which states have how much money, and you could actually look in here. If you look over here, that you see how much they were allocated. You can see their quarterly reports, how much they've given, and you can actually go to the individual state website to find out what their program actually is, whether it's unemployment assistance, principal reduction. So I recommend you guys, earmark that one to kind of check it out. Again, www.treasury.gov, a lot of information on there. So who's interested in seeing how to get a 742% return on a single note investment? Oh, wow, I could actually see hands up. That's awesome. Hold on. Dave, we'll get to that in a few minutes here. I don't know what the hand up means other than somebody. Yep, somebody's raising their hand. Excellent. That looks cool. All right, cool. So now I'm going to take you through one of my success stories. This is, and some of you have seen this story. Most of you haven't. This is a real case study of Dana Michelle in Warren, Ohio. We paid $26,000 for the loan. This was on a current value of about 68 to 70,000. So, and they only owed about 68,000. So we got this loan probably back in 2011 or 2012. I can't remember, right after we started. And the cool thing was, from most of the loans that we were buying, most of them were upside down by almost 200%. This one, they owed about what the house was worth. So this one wasn't actually in that bad shape. We went out there on one of the first trips my partner and I went on before we were really growing the fund to really see what we were buying in these areas that we really had no idea. Knocked on the door, met Michelle, found out the story. It was her grandmother's home. It had been in the family for 40 years. Emotionally attached. Her husband was a pool maintenance guy in Ohio. When the market blew up, probably not the best business to be in. So they fell behind like millions of families, and got caught behind the 8 ball. Michelle was disabled, so they were basically living on her state disability, which wasn't enough to keep up on the payments. Now, keep in mind the payment on the house was only $606 a month. They couldn't go rent anything for less than they were paying, so they were pretty motivated. Besides the emotional attachment to grandma's house, they were pretty motivated to do what they can to stay in that house. So I had just heard about the hardest hit funds maybe a month or two before that, and I had the conversation with Michelle when I was out there. I think this program is made for you guys. It could work out perfect. So why don't we try? So backing up a little bit. So we paid $26,000 for it. The balance on the loan was about 68 grand, and they had about $22,000 in arrears on that. So I did something I shouldn't have done, which I never did after that. I told Michelle, I said, here's the plan. We're going to have you apply for the hardest hit funds. We're going to see if we can get you through the system. If we can, the money from the state is going to reimburse us all of the past due payments that are due, and this way you don't have to deal with that. I told her worst case scenario is that if you don't qualify, I'm able to just wipe out that $22,000 in arrears. So I kind of gave the hand that I wasn't an employee of the bank. I was the guy who could make the decision, and I highly recommend you never do that. Always keep yourself insulated from it being the decision maker on some of that stuff. So she was like, okay, great. And again, what you find, and this is where the borrower outreach really helps out, as motivated as they were, as soon as I left the house, guess what? They stopped doing what they needed to be doing by applying and following up. So we really had to hold their hands quite a bit on that to be able to kind of get them to do what they needed to do. So we did tell them that they were able to, so again, trying to keep them on point to be able to kind of get through the paperwork. That became part of the challenge. Okay, so let's look at the economics of the deal. We got them to make 6 payments of $606. We got a total of $3,600 in payments. We had them successfully navigate through the hardest hit funds, and we got $32,000 from them on that. Boom, right? Now remember, we paid $26,000 for the loan, so we already got all of our capital back. Another thing that we were able to do with them, which we're not going to talk much about now, is there was a program, still is a program called the FHA 1023 program, and it was a program made specifically for distressed homeowners that might be a couple of years past due on their mortgage payments, where they're able to get refinanced into a new FHA loan. So we were able to successfully get them through that, and we got refinanced out at about 97%. So we got a check from when the refinance closed at $57,000. So we got a total of $92,000 on a $26,000 investment in roughly 6 months. That equates to 371% in 6 months, or 742% annualized. Boom, right, guys? Okay, let me check for questions here. Hold on, I got a couple of hands popping up here. All right, so let's talk a little bit about AssetWorks, which is where this thing ties in. Okay, so this is what we have here. We call it the circle of the note life, right? We've got our note boot camp. We've got the note boot camp on top, which we tie in with education. We're going around to various people. We're able to various areas. We're holding 2-day events. We hold here in California weekly events to be able to kind of get investors involved in that. And most of you guys already have all this education. I just want to explain where AssetWorks came from, which we're going to talk about here. Then we have our trade desk where we do acquisitions and sales of notes through various sellers, including ourselves. And then AssetWorks becomes the workout part of this that we'll talk about in a moment. So AssetWorks, again, a couple of bullets here on that. Loss mitigation from the servicers, and most of us are dealing with the FCIs, and various other servicers that are doing loss mitigation for us. Loss mitigation from the servicers are really not results driven. Sometimes you're sitting here as a note investor and you're thinking, these guys just want to keep me here. They just want to keep collecting, the $30 a month or the $100 a month, whatever they're getting, without getting anything done unless you're really staying on them. So we got real frustrated from that on our side, which made us kind of put this program together ourselves. Biggest problem that we run into, and the biggest problem that you're going to see being out there in the note world, is speed of execution. The quicker you can get out of a loan that you bought, and getting out of the loan, whether that means getting it to foreclosure if you're foreclosing, or getting it to modification if you're modifying it, or whatever it may be, speed is of essence to get your returns handled on that. Servicer collection departments typically are handling way too many files for employees, so you start seeing that. Phone calls are not getting made in timely manners. They're maybe putting a call every other day or a couple of calls every other day. So again, that's kind of that's what we see, and a lot of you guys are probably seeing the same things. The a la carte fees, they're insane. What some of these guys are charging on top of the monthly fees on what they're getting on that stuff. So moving on here, so here's what we put together. We have, for a flat fee of $75 a month, our team, and we've got a team of debt collectors, attorneys, everything involved in this to put this together. Our team provides you the tools to proactively manage your loans, mitigate loss severity, increase ROI, and strengthen the value of your loan portfolio. The combination of the talent and technology delivers these important services. So we lined out, and all of this is at the Note.Guru website. We lined out all the things that we're covering in this, which again, you'll kind of go through here. Onboard due diligence and exception recording, which is pretty big. You just bought a loan file. What's in that loan file? Did you get? Is everything that you're supposed to have in there? Borrower outreach, we just talked about. Skip tracing, credit reporting, servicer oversight, hardest hit fund screening, asset management, asset valuation, workouts, coordinating the delivery of collateral and service transfers, title curative work, bankruptcy coordination, eviction coordination, lender insurance, tax lien monitoring. The list goes on and on. So we're doing a lot of that for you to keep you in the loop, and again, ultimately getting you to a quicker disposition of your asset, or at least to that communication with the borrower, so you know which way that needs to go. Whoops, hold on. So there's more information on that at the website. You guys can check that out. Again, I don't want to spend too much time on that, but we just launched that last week, and we're starting to onboard with that now. So real excited about that. And then very briefly, financing for our NPLs is available next week. We just got the first approvals in, first closings are done, and it's going to be starting. We're going to be launching it actually full details at the LA Note Boot Camp, but we'll probably end up doing another webinar for that where I won't be yelling at my kids. And sorry about that. And rates will be in the single digits. It's set up as non-recourse financing, and it's going to be on 3-year terms. So we're real excited about that. It's one of the programs that's been out there typically for some of the larger buyers. Minimum loan amounts used to be $1.5 million up to the big dollars. We have this rolling out at starting at $250,000 loan amounts on single loans or multiple loans as well. So it's going to be pretty cool stuff on that. So that's it on that. Just a real quick run through, then I'll hit some questions. Note Boot Camp, if you're out in California, the last one in California, I think the last one, starts May 3rd next week. It's an intense 12 hours of instruction, guaranteed to get you in the game with all the support you need. And we always put it like this: it's guaranteed inventory, guaranteed support, and a guaranteed network. It's $4.99, and more than half of the people that attend our boot camps actually end up getting their first notes before the boot camp's over. So that's pretty cool. And then same thing, we're rolling it out to a few other locations this year: Phoenix, Las Vegas, and New York, New Jersey. I'm not sure where on the East Coast yet. But that'll be a weekend event as well. So that's it for this. I'm going to take some questions. Again, a lot of you guys, we post stuff up on the various Facebook pages, LinkedIn and Meetup. So however you found us, just keep paying attention to us over there. And let me just go in here and see who's. Let's see. Okay, let me quickly go through the Mark. Don't yell at your kids. What part of Cali are we in? We're down in Southern California. Offices are in Irvine. Does this come with Noteworks? Yeah, Noteworks gets thrown in with the boot camp and or the Asset Works. So we're kind of tying it all together to make that a little bit easier for everybody. And how many notes are we required to purchase at Note Boot Camp? There's no requirement. We're going to try to get you to buy in your comfort level. So many people start with 1. We've had people start buying 3. You could buy depending on how big your checkbook is. Hopefully that makes sense. Class compared to Eddie's speed. Eddie is a phenomenal teacher. We're not trying to compete with Eddie. Eddie does a lot of mastermind mentoring and advanced education. That's not our game. We're nuts and bolts 101 kind of guys. So we're going to give you the basics to get into the business. And if you feel you want advanced education, Eddie's great. Scott Carson's great. There's a bunch of guys that do more advanced training and stuff like that. But what we found and what the feedback we're getting is that our boot camp, again, what a lot of these other guys teach is some of the more of the marketing, fundraising, and some other things, which we really don't, we touch basically on that. We're going to give you all of the information you need to get in and buy your first notes, and then of course have the support to help you work out those first notes. What price points? I'm assuming that means what price points are the notes. We've had people buy loans as low as $3,000, and most expensive loan we sold was a $300,000 loan. So they're all over the board. Okay, let's see, price points. Hardest hit funds are not available for land contracts. They're only on mortgages. Easiest states for hardest hit funds. We have found Ohio, Georgia, and Indiana to be the easiest ones. Illinois, I heard, was easy until they ran out of money, but they have new money now, so we'll see how that goes. Noteworks. Noteworks is a loan management software platform, cloudware. You can go to noteworks.com and find out more about that. Do we comp in any past or present military? We absolutely do, Johnny. So why don't you send me an email afterwards, and we can chat about that depending on which market you're going to be in, but absolutely. You joined late. Do you do first and second position MPNs? Everything we do is first mortgage. We touch briefly on seconds. Out of 1,600 loans, I bought 5 seconds. So we don't have a lot of experience in that, although a lot of guys that we network with do. So 99% of what we talk about is first, although you will learn a little bit about seconds. Do we have any other online training programs? Nope. We don't do that. Some of the other guys have that, and again, you can ask in the forums to see who recommends who on that. All righty. Let's see. Anything else? Okay. Oh wait, here's a few more. So let me back up. Online, no. Email, so you guys can reach me at info@note.guru. That'll come to me wherever I am. Let me type that in there. There we go. So that's in there, and then let's see. Have hardest hit funds been funded to each state as of now? Been funded to each state. Yeah, Don, I'm assuming you mean the last round of $2 billion. Yes, it has been funded individually to the various states. Okay. Let's see if anything else. All right, cool. Well, I'll stick around for another couple of minutes. If you have any questions, hit that. I'm going to try to edit out the stuff in the middle, and then I'll get this posted up in the next day or so. Again, thanks for sticking with us here. If you have any questions, feel free to email me. Go to www.note.guru. Information on the boot camps, information on AssetWorks, information on anything else that we are involved with at this point. So thanks for sticking around, guys, and have a great night. And I'll stick around for a few more minutes. Who's buying? Dave, I'm obviously buying the first one tomorrow. I gotta figure out how to mute these computers better if I'm gonna work from home. See you tomorrow, bud. Nathan Turner. Yeah, that won't happen, Javon. Are you finding California notes that aren't priced out of the yin yang? Depends on how you define yin yang. We have a couple of notes right now that are probably in the 70, 75% of value range. Much better than the 82% that we saw the last pool going at. The problem is you have a lot of stupid money in California that's just looking to grab stuff up. So again, there is some stuff that makes sense, but there's definitely people. Again, there's a lot of stupid money out there. Stupid money being some overseas money that's coming in and just trying to buy up certain markets. So we got to deal with it, unfortunately. Are your services only for boot camp clients? Absolutely not. If I just want workout or financing, is that available? Absolutely. You will have to be for the hardest hit fund stuff. You will have to be a workout client, which you just asked, and that's fine. Financing will be available to anybody, but any of the hardest hit stuff, you'll have to be an AssetWorks client. Is there a link we can post in the Facebook group? A link to this? Are you talking about, Dave? For the for the webinar. Jim, thanks. Thanks for the well wish. Oh, Don will be there. I'll see Donna, I'm sure. Yeah, I'm going to post it up after I get it done, Dave. And what quality notes are expected if I could only swing 5,000 to invest? There is great quality available for inexpensive. We had one client that bought a loan for like literally $2,800 in Florida. She ended up making 3 times her money on it. So made almost got back just under $10,000 on it. So again, not that they're all like that. If you can invest $5,000 and get $7,000 back, you're making great returns. So there's a lot of stuff out there. Yeah, Johnny, I'll pass on that one. Let's see. Johnny Holmes, that seems like a fake name. Let's see who that actually is later. Finance lending should be starting in about a week. What's the length of most of the NPNs? Not sure what you mean by that. Clarify if you want. Thank you, Jim. Great. Thanks for listening in. Your name's not fake. Okay. Thanks for listening in, Johnny. Time to foreclosure. So let's see. Let's go back to Brian. What's the length of most of the NPNs to foreclosure? Varies by state. Georgia, 30 days. Texas, very quick. Florida, typically a year or under. Ohio, usually a lot for about a year. Anywhere from 90 days, 30 days. I mean, 30 is a few states, but it should be certainly less than a year in a lot of those markets. Thank you, Jay. And yeah, give us a shout out if you're out in our neck of the woods out here. We do a lot of meetups out here besides the Note boot camps as well. All right, guys. I'll leave this on for another minute. Still got about 20 some odd people hanging out, loitering, which is okay. Loiter away. Thank you, Brian. Yeah, Brian, actually, we were thinking about doing one in Chicago, which just hadn't come together yet. We're kind of limited on how much we want to get out there. Again, this is a smaller part of the business. We're still operating, buying, selling, buying, and doing all the other stuff. But Chicago's on the radar if you're, depending on where in the Midwest you are. Can I explain the terms for the financing? Yeah, absolutely, skin in the game requirement. In a nutshell, the loan will come in at either 65 to 75% of the lower of acquisition or market value. So in other words, if you're acquiring, you're going to go off the acquisition price and you're going to bring in 25 to 35% of that purchase price. Also, that's determined by if it's a judicial foreclosure or non-judicial foreclosure state. And if somebody's had the assets and they're refinancing to pull some cash out, so they've owned them for over a year, we'll use the appraised value or the actual BPO value on that. More details to come later. I don't want to get too much into that. Yes, Manny, I will be editing. Going out to Vegas for Paper Source, leaving tomorrow. I'm sure I'll see you out there, Tom. We'll have a booth there. Stop by the booth. All right. All right, guys, I got to go pack. It's 5:45. Getting you off of here in just the right amount of time. Again, thanks a lot. If anybody has any other questions, just go ahead and shoot me an email, and I'll respond back to them. Obviously, if you're going to be in Vegas, stop by. We could talk more about it as well. Have a great one, guys. Thank you very much.